Talking about leading from the front there, and I guess who else to lead but the president? As a former governor of Lagos State, it would be nice to know if he is still receiving some of those entitlement pension and house and cars and all of that. And remember that the wife of the president had told us, well, they are coming to serve because, I mean, they're not broken anyway, both of them, you know. So, but obviously this is an ongoing conversation, especially as Nigerians continue to feel the squeeze from, you know, the policies, unification of the FX rate, subsidy removal and what it's doing to transportation and food prices. It would be nice to also see the sacrifices or the squeeze felt by public office holders. Well, talking about some of those policies is yesterday we saw, or for 2 days now, we saw a lot of movement in the currency market. We saw the Naira drop to as much as 860. We saw it go back to about 797.60. And we're trying to understand why this sudden movement. Is there new demands for the dollar in Nigeria? Let's talk to Kelvin Emmanuel. He's always good with the numbers and data, background number. That's why we have him on the show now, joining us from our Abuja studio. Thank you so much for your time, Kelvin. What's going on? What are you guys doing to the Naira?
Good morning. Thank you so much, Ini, for having me. Well, you know, when you look at the FX markets in Nigeria, by the way, floating the Naira, unifying it was a good decision, and I commend the president for it. Also, the fact that the central bank has come up to, you know, create like a non-exchange, non-deliverable forwards market to become a market maker for forward contracts is also admirable. I'm aware also that the Central Bank of Nigeria has cleared FX backlogs up until the end of the first quarter in 2023 for Form A, dividend, capital remittances, and matured letters of credit. They're still outstanding. And for example, the airline balance, because, you know, Nigeria has $818 million of about $2.3 billion globally of trapped airline funds. You know, the airline is one of the categories of capital remittances that are stuck in Nigeria. So basically, there are short-term solutions and there are long-term solutions in it. And I say to Nigerians that it's too early for us to judge whether the unification of the Naira was a good decision or not. In my opinion, it was a good decision. And the short-term solutions to the problem is liquidity. Now, take, for example, the fact that the NEC had a meeting yesterday and they declared that 1.9 trillion Naira was actually realized and is going to be shared amongst the federating units. FIRS came out and said they generated 5.5 trillion. I'll let you know this. Nigeria should not expect that next month. And I'll tell you why. For example, the NLNG that Nigeria owns 49% of, the Nigerian government, through NNPC. NNPC holds the 49% shares that the government owns in NLNG, actually paid its annual dividend to NNPC of $1.1 billion, which was retained. And then it paid $699.3 million to the FIRS. Then it paid in corporate income tax. Then it paid $256 million in withholding tax. Now, historically, if you look at it over the last 23 and a half years, NLNG has generated a total revenues of about $131 billion. It has paid a total of about $28.6 billion to the Nigerian government over the last 23 and a half years, right? The highest revenues generated in a single year was about $11.6 billion, which was in 2012. This year, it did about $8.8 billion, even if it had issues and it couldn't meet up with 22 million metric tons. So short term, the government-owned enterprises on the balance sheet of the federal government of Nigeria is supposed to provide FX liquidity for the Central Bank of Nigeria to be able to supply the market, right? But how much of liquidity is it providing? Because traditionally, the government is not supposed to spend the dividends. The government is supposed to keep the dividends NLNG pays as retained earnings for new capital investments in FID for next year. Maybe he wants to do like complete funding for Train 7, or he wants to do Train 8 or Train 9 to increase the capacity Because current capacity of NLNG, for example, is 22 million metric tons per annum. Obasanjo, between 1999 and 2006, built that entire 6 trains, and since then we've not had any. Train 7 has been in development for 2 to 3 years, but we've not seen it. Now, that is supposed to be a short-term solution, but we don't have enough liquidity from that to settle the outstanding FX we have from A requests, for capital and dividend remittances, for matured letters of credit. So what are the alternatives in it? There's what they call foreign exchange support that central banks use. In 2008, when you had the global financial crisis, the likes of the Swiss National Bank, the European Central Bank, the Bank of England, the Bank of Japan, they did what they call foreign exchange support with the US Federal Reserve that issues the dollar, because they were having liquidity issues for US dollar for banks in these countries and in these regions. And under that, there are 3 ways through which a central bank can fund outstanding, right, and create liquidity in the FX market. It can fund it through borrowing from banks, which are FX swaps. It can fund it through drawing on your federal and foreign reserves. It can fund it through what they call terms of auction, right? Now, I'll tell you what, in central banking, there's what they call the Guidot reserve ratio to debt, which says that your foreign reserves should not be lower than your external debt. Nigeria's foreign reserves is $36 billion. Nigeria's external reserve is $43 billion. Yeah? The Central Bank of Nigeria can go to the US Federal Reserve and do either FX swaps, FX swap if it has credits with the US government in either US treasuries or deposits, or you can do terms of auction, collateralized lending. And I'll give you an example. Last year, Zainab Ahmed, I like giving this example because Zainab Ahmed last year signed a contract with the International Development Association of the World Bank to borrow $800 million for palliatives. An interesting thing was that she staked 17.1% of Nigeria's SDR units, special drawing rights at the IMF. Nigeria has about 3.3 billion SDR units at the IMF, and which is what, about $4.5 to $4.6 billion. So if you need collateral to do collateralized lending at terms of auction that the US Federal Reserve offers to foreign central banks as foreign exchange support to provide liquidity for your own FX market, why don't you use your special drawing rights at the IMF? This is a short-term solution that the Central Bank of Nigeria can use to bridge the gap we have for outstanding or backlog in FX that companies in Nigeria need for capital and dividend remittances, for matured letters of credit. That's how you calm the market, because in a unified exchange rate market, the exchange rate moves based on demand and supply. If demand is higher than supply, the currency is going to weaken. If supply is higher than demand, the currency is going to strengthen. That's the principle. Now, the question that we have to ask ourselves on the long run as Nigerians, and the government needs to ask itself critically when it sits down to discuss and plan, is, do we want a weak exchange rate or do we want a strong exchange rate? Countries adopt weak exchange rates when their exports are higher than their imports and their balance of trade is surplus. They adopt a strong exchange rate when their imports are higher than their exports and their balance of trade is in deficit. Nigeria has a situation where it exports more raw materials and imports finished products. So when you look at that balance, it doesn't favor a weak exchange rate. So on the short term, in order to solve and address liquidity issues and stabilize the market, especially when you consider the impact of the exchange rate on the price of fuel, because at the current exchange rate, it costs you about 565 Naira to deliver on flat pricing, to deliver 1 liter of PMS in Nigeria, plus the 27% of handling costs for landing PMS in Nigeria. And considering that Dangote refinery is yet to begin refining, and when he begins refining, it's going to cost him somewhere around 480 to 490 Naira to produce 1 liter of PMS, right? It's important that the central bank looks at it and say, why are foreign direct investors not bringing in funds immediately to raise the FDI volumes in Nigeria to create liquidity to stabilize the market? Number one, there's an outstanding backlog. That's why they're not bringing it in. For you to stabilize the market, you need to look at international precedent and create some kind of liquidity from collateralized lending from the U.S. Federal Reserve.
All right, Kelvin. Sounds like we have a long way to go, unfortunately, and everything is related, from liquidity to policy to, loans and collateral, SDR and all of that. But it's our country. This is our country, so we'll stay on the matters. But thank you so much for your time, Kelvin Emmanuel, financial analyst, always there with the data and sharing it with us. Thanks a lot and enjoy your weekend.
Thank you, and you too.